Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in previous videos, and I will do a quick review on each of them. In a later segment, I will begin covering these new names and review them in future videos. Also, I will cease coverage on these names because their chart patterns have been invalidated or did not perform up to expectation. I have put in timestamps, so please use them to skip to the names that interest you. Bitcoin didn't bounce the way I expected in the video on the 6th of December last year, though it did correct. But with price action breaking below the Ichimoku cloud last week and likely to close below the support at 74,303, downside is still preferred. I am still technically bearish on Bitcoin due to a rising wedge. The textbook target is at 55,000. This week, Bitcoin fell to a low of 60,000 and 55.75. That is reaching 88% of this textbook target. Now, assuming Bitcoin fails to close below 74,303 this week. Just to note, the closing for the week is on Sunday, 8th of February. Then it is likely to bounce higher. And if this happens, I will consider this as the correction phase of this rising wedge, after which Bitcoin should enter the bearish resumption phase. Tesla continues to carry a bearish potential as highlighted in a video on the 28th of December last year. It continues to form a double top on the weekly chart, and downside bias has prevailed after it closed below the 20-week simple moving average last week. Of course, at this stage, Tesla is still not technically bearish because we need bearish confirmation, which is via a weekly close below the neckline at 214.25. So there are still some ways to go. Tesla could just rally above 498.83 to invalidate this bearish pattern. Now, just to speculate on potential moves going forward, Tesla may fall to around 383.73, rebound, and fall thereafter. And if this happens, then it would have formed a head and shoulders top, another bearish pattern. Let's see how this develops. I maintain a technically bearish outlook on SAP in the video on the 17th of January, stating that the textbook target of the cup and handle top is at 130.38. This remains the case. SAP broke below the support at 181.82 and quickly reached the next support at 165.44. Closing below 165.44 will see it extend its downside, while a bounce is expected to trigger a rebound, which I would view it as the correction phase of this bearish pattern. Now, seeing that price action over here appears to be supported by 165.44 twice and has overextended below the lower Bollinger, I expect the next move for SAP to actually be higher first. In the correction phase, price action usually returns to slightly above the neckline, 209.10, before entering the bearish resumption phase. I will be staying bearish on SAP. The last review on Adidas was on 6th of December last year, and I stated that the falling wedge remains valid because price action has not closed below the support trend line. This remains the case. Price action fell to the support trend line and bounced higher 2 weeks ago, now trading back above the resistance trend line. I will maintain a bullish outlook on Adidas and continue to target 256.30. I realize I've not updated on Meituan since 1st of November last year, and quite a lot has happened. In that video, I said that there is bullish potential due to formation of a falling wedge. Since then, Meituan completed this falling wedge over here on the 26th of November, trended higher before tumbling thereafter. Now, as noted in the case for Adidas at the beginning of this video, this falling wedge remains valid because there is no close below the support trend line. In fact, I would argue that the price action has bounced off the support trend line. Also, I can see that price action formed a bullish engulfing candlestick over here, suggesting near-term rebound. I am still technically bullish on Meituan. The textbook target is at 116.1, which coincides with the low over here of 27th of August 2025, a day before the gap down. Now, my view is that gaps are usually, though not always, partially or fully filled. This gap down also supports my view that Meituan is going to be higher going forward. In a video on the 12th of January, I identified a head and shoulders top in Palantir Technologies. This bearish pattern was completed here on the 30th of January, and the textbook target is at 87.69. Now, if you examine the latest price action, Palantir closed below the support at 130.63, but quickly rebounded to close back above it. So I don't know if this could lead Palantir to rebound, but in the event of rebound, I believe it is going to be corrective in nature. It is to me just the correction phase of this bearish pattern, after which downside is expected to resume. Only if Palantir closes above the Ichimoku cloud, I will give up on this bearish outlook. Sterling Kiwi broke below the support trend line on the 20th of January, a week after I first identified this ascending triangle. As noted in the last video, the textbook target is 716 pips from the point of breakdown, which is at 2.2391. Sterling Kiwi fell to a low of 2.2596, reaching around 71% of this textbook target, with price action diverging from the lower Bollinger and suggesting easing downside bias. I expect Sterling Kiwi to go into the correction phase of this bearish pattern, and there is a chance that it goes back to 2.3107 or higher before entering the bearish resumption phase. I started coverage on platinum by turning technically bearish due to the completion of a rising wedge. This week, the textbook target at 1,872.66 is reached. This rising wedge is now deemed resolved. I will continue covering platinum, however, just because I suspect that a new pattern may be forming. If platinum closes below 1,891.87, or if it rebounds higher to around 2,525.89, then falls and close back below 1,891.87, then it would qualify as a head and shoulders top. The textbook target of this head and shoulders top, if completed, is very low at 903.25. Just to be clear, as of now, there is no new bearish confirmation, and we just have to wait and see what happens. I'll begin coverage on Kimberly-Clark, a personal care company known for brands like Huggies, Kleenex, and Scott. I am technically bullish on Kimberly-Clark because it has completed a falling wedge on the 4th of February. This bullish pattern has a textbook target at 113.67. I suspect if Kimberly-Clark actually rallies, there could be further upside because there was a massive gap down over here on the 3rd of November. And I suspect Kimberly-Clark will fill this gap, which is a potential advance to 118.15. Falling from here is fine, but this bullish pattern will be deemed invalid if price action closes below the support trend line. Next is Rheinmetall, a German defense corporation. I suspect that it may be forming a head and shoulders top, albeit with a downward sloping neckline. Completion is via a weekly close below the neckline around 1,409. The textbook target is for a 537.41 euro drop from the point of breakdown. Alternatively, rising above the last high, the second shoulder at 1,965 will invalidate this bearish pattern. This next stock is also a German company, Mercedes-Benz Group. It may be forming a head and shoulders bottom on the weekly chart. Price action is already trading above the Ichimoku cloud, so upside is preferred. A weekly close above 62.31 is required to complete this bullish pattern that has a textbook target at 76.77. The lower it falls below the Ichimoku cloud, the lower the chance of it turning bullish. The final stock is yet another German name, Deutsche Bank, just completed a rising wedge this week. I'm now technically bearish on Deutsche Bank, and the textbook target of this bearish pattern is at 26.16. Rebounds going forward will be viewed as corrections, but closing above the resistance trendline on a weekly basis will invalidate this bearish pattern. Moving on to names that I will no longer be covering in future videos, I covered Nissin Foods as a successful call in the previous video on the 2nd of February, so I won't repeat that and instead place it under the Cease Coverage segment. I started coverage on Nissin Foods since 18th of August 2024. There were two patterns that I highlighted for this name. First one was a head and shoulder stop, and the textbook target is at 2,539. Nissin Foods fell to a low of 2,628 in October 2025, reaching 93% of this textbook target. Then I turned technically bullish on Nissin in October due to a falling wedge. This week, Nissin Foods reached 3,248, the textbook target of this falling wedge. I will now cease coverage on Nissin Foods. Next, I will cease coverage on Swiss yen. I turned technically bearish on Swiss yen due to the completion of a rising wedge on the 4th of December. Technically, the rising wedge has not been invalidated, but price action has advanced much higher, so I believe it is no longer appropriate to maintain this bearish view. Lastly, I will cease coverage on British American Tobacco. The potential double top that I highlighted in a video on the 12th of January was invalidated this week. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.